Good morning and welcome to the ADS Securities Fundamentals Update. Beginning with the Asian session and in line with our expectation mentioned in our previous reports, and as the employment components in many sectors in Australia showed some improvement, Australia's jobs report came in much better than expected. The economy added more than 14.2 thousand in new jobs in April, comparing to 21.9 thousand jobs in March, while it had been anticipated to add only 7.5 thousand jobs. Furthermore, the unemployment rate unexpectedly stabilized at 5.8%, while it had been anticipated to tick slightly higher to 5.9%. The Aussie advanced across the board today, rising the most against the US dollar to 0.9376 so far, while the next obstacle resistance remains at 0.94. In China, trade balance surplus has doubled in April, rising to 15.5 billion yuan, up from 7.7 in March, while it had been anticipated to rise to 15.2 billion as exports increased by 0.9%. Going forward to the European session today, there are a few economic releases, while the major market mover is the Bank of England and the ECB decisions later today. In Germany, industrial production set to rise by 0.2% in March, comparing to a rise of 0.4% in February, while another negative surprise could be seen today following the factory order and manufacturing production negative data that were released yesterday. In Switzerland, CPI, month-over-month CPI is expected to rise by 0.1% in April, comparing to a rise of 0.4% in March. As for the central bank's decision, the Bank of England is expected to keep the current policy unchanged, with interest rate at 0.5% and the asset purchases facility to add £375 billion, side by side with the ECB, which is expected to keep the current policy also unchanged on a less deflation risk. As for the US session today, jobless claims is expected to decline slightly to 328,000 last week, down from 344 the week before. While the key event for today is Janet Yellen testimony, again the second testimony, which will take place at 13:30 GMT time. No major changes is expected in today's testimony, and Yellen is likely to stick to yesterday's answer and not to give any time frame for the first Fed fund rate hike date, which will continue to hold the 10-year bond yields below 2.8% and would put more pressure on the US dollar. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.